This is the briefing for Friday, September 12th. Well, in yesterday's briefing, I talked about the fact that the indices had reached a point of being overbought. In fact, getting to an extremely overbought condition, as you can see right here. This is the NYSE. You can see it's overbought as of yesterday, and this is the NASDAQ overbought as of yesterday. And that suggested then that potentially we were going to see some type of pause or some type of rotation. Well, interestingly enough, we got an intermarket divergence, and what we got was the spiders put in a new all-time high, but you can see that there was a pretty big divergence in market breadth and a divergence in net volume. So this was, while we did put in a high above yesterday's high, this was a very, very weak move, and it led to selling going into the last hour of trading, as you can see there. Same thing with the NASDAQ or the Qs. You can see a slight new high here, but there was a divergence in breadth that was pretty significant, over 1,100 shares negative in the NASDAQ as opposed to higher. And then, of course, net volume was diverging as well. The only real the index that was really on track today was the Russell, the IWM. You can see it sold off, came down, paused right at this 236, 238 area, and then paused right at it, bounced off of it, and then going into the closed just below it. Breadth in the Russell was fairly negative as well, and net volume was negative also in the Russell. Now, going forward, you know, it's going to be important that we worked off a pretty good amount of that overbought condition, basically neutral at this point in time, but it's going to be interesting to see if we see follow through to the downside in tomorrow's trading. Now, one of the things that I watch for when I get to an overbought or oversold condition is to see if the trend continues, which it did today slightly, but to watch what happens with the internals. And if you see divergences, it suggests that you're going to see potentially a counter trend rotation, and of course it could be just a pause or another rotational pattern that we're going to see going forward. So as you can see here, you can see this was a rotational pattern that we got in the Qs. Really a rotational pattern here in the spiders, and a pretty big rotational pattern in the Qs. So it's going to be interesting on Monday to see if we're going to see some follow through to the downside, or if we see if we see a move back to the upside. Important to that is going to be if we take out today's low and what happens with the internals. The internals are weak if we take out today's low, and that's going to suggest there is going to be follow through. If we take out today's low, but the internals are stronger, expect a rotation back up again. And finally, if you see a rotation back up and the internals are stronger, then that's going to suggest potentially that we're going to put in a high above today's high. Watch also the intermarket divergence. The Russell really lately has been signaling or giving better signals, I should say, than the other two indices. Looking at the longer term approach to it, you can see volume was down in the spiders, 52-week highs minus 52-week lows was down. Breadth was negative in the NYSE. So you can see that it is just trading above the 651, 652 area. That's important support for the spiders. In the Qs, it is right at support at the 586 area. You can see volume just basically flat, negative breadth, and net volume was down also. In the Russell, it is a little bit better. You can see this area right here, this 238 area, closed right at it. That's going to be an important area for Monday morning. If the Russell trades through that, we're likely to see a test of yesterday's low. Volume really muted in the IWM in today's trading, but Russell breadth was fairly negative, and net volume was pretty negative as well. Now, I want to do something I rarely do not do, and I want to talk about an individual stock. And I was looking at it and actually talking to somebody else today about Cisco. The ticker is CSCO. And when I looked at it, I thought, I mean, really the news and the fundamentals aspects of this, it should be that the stock is going up. But as you can see, it's in a rotational pattern right through here. And we had a false breakout for 4 days, then back into the rotational pattern, testing the lower extreme at 66, upper extreme at 70. And it's testing 66 once again. Now, to some degree, this has the appearance of a head and shoulders top. You can see a shoulder, a head, and another shoulder. So the neckline is at 66. This is about almost seven points from 66 up to 72. This closed above 72, 72, 80, 89. So let's call it 7 points. So that would project the Cisco, if it breaks 66, it would project it going down 7 more points, which would be a fairly decent move if the head and shoulders top performs. Now, as I do all the time when I talk about different technical patterns, they are not that pattern unless they follow through and we see a break. So this could be just a technical rotational pattern with a false breakout, or this could be a head and shoulders top. Breaking 66 could be a significant event. On the other hand, if 66 holds and we begin to see a rotation back up, then that would negate the head and shoulders potential, and that would suggest then a rotation back up to 70, which is still a pretty good move. And if you break 70, then you're looking at testing this top at right around the 72.50 area. So it's something I've got these trend lines up, there's alerts on them. If we break 66, I'm going to be looking very seriously at this, mainly because we got some convictive selling right in here, bringing it back down into this range. So I think that could be important going forward. This is a 15-minute chart of Cisco also, and you can see this convictive selling right through here. There's a gap, and this is a selling tail, a pretty convictive selling tail, and then the follow through to that selling tail. So watching that also, if we were to trade above the 67 area, I think that would be a pretty good indication that the people who sold this so aggressively are not going to defend it, and potentially you're going to see rotation all the way back through this range. Just something to kind of keep on your radar. There's not a tactical entry, at least not for me, not at this point in time, because for me it's a 50-50 shot as to whether it goes all the way back up again to retest 70 or whether we break 66. Breaking 66 or holding 66 over the next day or two is going to be the potential for a tactical entry, especially watching what happens around this 67 area. If that's traded through or traded to, then that's going to increase the probabilities of trading up to the 70 area. Just something I thought I would throw out there for you to look at, potential possibility here. Have a great weekend, and I'll pick this back up again on Monday.